VA loans explained in 2022. Hi, I'm Kevin Jefferson, the People's Lender, NMLS number 1433853. So today we're going to talk about veteran loans, better known as VA loans. In order to qualify for a VA loan, you need to be a veteran or the surviving spouse of a veteran. So one of the qualifications is you have to do at least 90 days during wartime, 181 days of peacetime, or completed 90 days of active duty. You can also be eligible for a veteran's loan if you were in the National Guards or a reservist, and that's simply by putting 6 credible years in the National Guards or the reserves. Another way to qualify for a VA loan is for you to be the surviving spouse of a veteran who passed away during active duty or from a disability caused in the service, and you have not remarried. The next thing you want to do is to get a copy of the certificate of eligibility from the VA, and by doing that you will need a copy of your or the veteran's DD-214, which is his or her separation papers from the military, which tells you what their start and end date is. If you're still active as a veteran in the military, reserves, or any of the armed forces, you just can apply for your certificate of eligibility, and they can provide it to you by calling the VA, the va.gov. Now, the great part about the VA loan is you have 0% out of pocket for your down payment. So you don't have to put any money as a down payment. You do have to pay for closing costs, which is a totally different set of fees than down payment. However, you have no down payment. Another benefit for the VA loan is there is no mortgage insurance. So on some of the loans, there's monthly mortgage insurance, which typically makes your mortgage a little higher. So you don't have that with the VA. However, the VA, as a veteran, you do have a funding fee. The VA uses the funding fee as a cushion to help them in case they have to take properties back into their hands and pay off the mortgage company who was servicing the loan for the veteran before they got foreclosed on. Now, the funding fee can be waived if you are at least 10% disabled based upon the VA. Now, the funding fee is 2.3% of your loan amount. So if you have a $200,000 loan and you're less than 10% disabled through the VA, your funding fee is going to be around $4,600. The funding fee is added into the loan. So if your loan is $200,000 even, and the funding fee is $4,600 based off of the sales price, your loan amount for the VA will be $4,600. Now, once again, like I said, if you are 10% or more disabled, the funding fee is waived. With the VA, you need a minimal credit score of a 580. Now, anywhere around the 580 mark, you're probably going to have something called manual underwrite. What a manual underwrite is where they comb through the file a little bit deeper and a little bit harder to try to help compensate for the risk factor for the lower credit score. The higher the credit score, the better off you are with the VA. It helps you with qualifying for more, as well as helping you on your interest rate. Now, with the VA, they do allow for you to go to a 41% back-end ratio. However, if you have higher credit scores, then they will allow for you to exceed that number. I've had a borrower who qualified with a back-end ratio of 59, which is the highest that I've ever had with a VA loan. So with the VA loan, it is for primary residence only. The VA loan allows for you to buy a single family home, a multifamily home from 1 to 4 families. It allows for you to buy a townhouse, and you can purchase a condo. However, the condo has to be VA approved, or you could get a VA spot approval to help with the loan. So I've also had people ask if they can buy an investment property with a VA loan. You cannot purchase an investment property with the VA loan. However, if you purchase your home as a primary residence, you only need to live in the house for 1 year, and then you can rent it out, and then you utilize your VA loan again. So with the VA, they like to see a consistent work history. With any loan that you get, they typically want to see a 24-month consistent work history, which isn't always just 2 calendar years. If you have seasonal work and you work 9 months out of the year and you're off for 3 months, we need to put together a work history of 24 months. Now, if you're just coming out of the military and you have a job, and let's say you've been on the job for 6 months, the VA will allow for us to utilize your time served in the military as a part of your work history in order to help you qualify along with your 6 months of work history. Now, in this current market, FHA and VA loans were not getting accepted as often. So what you want to do is you want to make sure that you have a lender who is well versed with VA loans, along with a realtor who understands the benefits of the VA loan. So when they're going to put in an offer for you using your VA loan, they can explain to the listing agent how solid of a deal it is, and to educate them on the different nuances of the VA loan. It's very important that you have a team that understands the VA loans in this market, simply because they were not getting accepted as often as they should. And the VA loans are pretty simple, cut and dry loans, if your loan officer and your team has an understanding of what they're doing up front and to help you get through in the process. If you have student loans and you also would like to use a VA loan, I have a video over here where you can listen to how to get your VA loan accepted even if you have student loan debt. If you have any additional questions, please comment below and I'll answer your questions. And do me a favor, subscribe and give this video a thumbs up. Thank you and have a great day.